everyone's doing well, and welcome back to another video. So cool, got something quite interesting today, right? It's something I've had a few questions on, something that even I myself wasn't well educated on in terms of futures firms, right? And I've been in quite a lot of reading, quite a lot of research, actually getting onto the websites, figuring out how all of this works, and I've come to the conclusion, right? This is a very good video to make because with the futures firms, I wouldn't expect them to go anywhere, right? Versus all the stuff we're seeing in the prop firm industry, specifically with our normal prop firms, and it's covered in the one of the previous videos you guys have seen. There's so many different situations going on. I don't think they will affect the futures firms in the same way or even close to it, really. But right, it's not as simple as that. It's not just, okay, cool, prop firm is problematic. Let's stop using them. Let's just go to futures firms. Because if they were the same thing, they wouldn't both exist, right? They would all just be one thing. They're two very different things, but also similar at the same time. So this video is going to explore what they both are, what the key differences are, and why trading futures could be a good idea for some of you guys. And if it is a good idea for you, how you can go about doing it, right? So let's get into the video. So start off, you guys can see, what are Forex prop firms? Right now, most of you guys watching this video will probably have a good idea of what they are. So, just quickly brushing over it. Usually a prop firm will go along this, right? You can buy what we call an evaluation account, right? You pay a one-time fee. For example, most prop firms may offer something like a 5K, a 10K account, 20K, 50K, 100K, 200K, and some even bigger than that. Right, let's use 100K as an example. 100K account will cost you somewhere in the realm of $400 to $500, right? That's your one-time fee. Once you buy this account, right, depending on which option you choose, it's either going to be a 3-step, a 2-step, or a 1-step. What does that mean? So the 3-step has its own rules. You have 3 separate sort of tests per se. You have your 100K account. The first step maybe make 5%. Make another 6%, make blah, 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 whatever it is. Each prop firm is very slightly different in terms of that. A 2-step is typically along the lines of, in your first step, make 8%, and the second step, make 5%, right? Now, 1-step is usually make around about 10%, and that's it. And each one has its own rules with the maximum loss that you can have, the maximum loss you can have in a day, and the types of drawdown that they have, right? It differs from firm to firm, but also differs between the plans themselves, right? And in terms of profit splits, most prop firms, as far as I'm aware, are usually in the realm of about starting at around 75-80%. So meaning if you make profit on the account, let's say this 100K you made 1%, then approximately $800 will go into your pockets. The firm will keep that $200, right? And of course, that's the payout you get. And if you consistently stay with them, right, if you maintain these accounts, your profit splits can go up. Right, some of the firms offer up to 90, maybe even 95%. And in terms of scaling, right, if you're profitable with a prop firm for an extended period of time, they will increase your account size automatically and offer you more capital. For example, your 100K account may be turned into perhaps a 125K account if you were profitable with a firm for over 3 months. They usually have some sort of criteria, right? And as long as you meet that criteria, it's fairly simple. They'll just give you more capital. And if this person made X amount of payouts, they've been consistent, they manage the risk, blah, 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 whatever it is, that's for them to assess. Right, cool. Now, when we talk about the sort of more technical side of it, right, how do these prop firms work? Right, they're very similar to they work with Forex brokers. They provide us with a feed. We trade off our normal apps, MetaTrader, nowadays MetaTrader has been banned, but DXTrade, whatever it is, right? And when we go on these apps, we're offered our normal instruments, Euro USD, GBP the stocks, blah, blah, whatever it is, right? But in terms of the feed, right, this price feed that we get, the actual price that we're seeing on our charts or, where we're pulling it from, where does this come from, right? It's what we call an off-exchange feed, right? Now, this is something that's actually slightly unfavorable because what this means is that each different prop firm, each different broker can have a slightly different valuation of the same thing, meaning the price of Euro USD on one broker can be slightly different to another broker, right? So when you're buying and selling, your charts may not align in the same way when you're looking at trading via one chart, but you're trading a different one on your app and whatever it is, right? But that's essentially how they work, right? This is the sort of very typical prop firm model, right? So now, what are futures prop firms? Right now, again, with futures prop firms, very similar to the Forex prop firms, there is typically, different types of plans offered with different sort of requirements and, different rules. But keeping it simple, typically they have a one-step evaluation and you have to make X% to pass that while following their rules. They typically have trailing drawdown, right? And they have, as I say, consistency rules, right? And these consistency rules can sort of vary, be based on, the pairs you're trading, even the way you're trading, and sometimes it's discretionary the way they look at it, but other times it's quite obvious, how much you're risking and etc. Things like that, right? They want to see you be consistent with what you do. Now, with the one-step evaluations, we'll get into a bit more detail with how exactly that they work. You initially buy an account, right? If you manage to pass this account, if you pass that evaluation phase, you then have something called activation fee, which is either paid monthly or you can pay it as a one-off lifetime fee, right? This is very different to prop firms where we have one fee just once. That's it. If you pass, you carry on trading it, you make your payouts, whatever, and that fee even gets refunded. Whereas on here, on the futures accounts, to sort of run this account, you either pay a subscription fee, or a lifetime fee once, right? Now, the profit splits, similar to Forex prop firms, can sit around that same range of 75%, 80%, whatever it is, and they can also go up. But one thing that's very different about the futures prop firms is that a lot of them will have limited withdrawals in a couple of senses. Some of them may say something like you can only request your first payout after X amount of days, right? Typically, even most Forex prop firms, you have a 14-day period of getting a payout, and then the next 14-day period you can get payout, right? With the futures prop firms, they have other sorts of limits, such as the amount. For example, if you buy a 50k futures account with MyFun Futures, they have a cap, I believe, on your first, I believe it is couple withdrawals, and you can't withdraw above $2,000, right, which is 4% on the account. And it's very important that if you guys, do decide to get into futures, you read very, very carefully what each firm is offering, because it can be very different, and the fine print is where you may get caught out if you might have issues later. You try to take it up with them and they're just going to tell you, well, you should have read the terms and conditions and everything on the website. Now, in terms of the price feed, one of the major differences, right? They, all these futures firms, all the instruments, where do they get the price feed from? They get from the Chicago Mercantile Exchange, right? What does this mean? It's a centralized price feed, right? Why is that a good thing? Because you're trading a very liquid asset, right? So futures, right, because there's a centralized price feed, all the buying and selling is coming from one place essentially, usually have no spreads or slippage, right? Sounds very good. If some of you guys have been trading Forex prop firms for a while, spreads and slippage can be a problem, especially if you're trading, high lots and, you've got small stop losses and whatnot. It can be very, very annoying. Even 1 pip spread or slippage, can set you back X amount. A 1% loss could turn into 1.2%, for example, right? Scenario dependent. But with the futures prop firms, because they have a centralized price feed, this typically means that there's no spread or slippage, right? Which is good. That is a sort of ideal environment for a trader, right? So what are some of the key differences? Now that we understand what both are, what they offer, they're relatively similar, right? But what makes them so different, right? The first thing that's important is the trading platforms. So with the normal Forex prop firms, we have our platforms such as MetaTrader, which has now been banned, DXTrade, CTrader, MatchTrader, etc. With the futures firms, you'll still have these platforms, right? Not the same platforms, but you'll have types of platforms such as TradingView. You can trade directly on there. We'll have something called TraderVate, and there's other different ones offered depending on which firm that you're with, right? The second big difference is the profit target to drawdown ratio is what, it's a sort of concept to look at an account and say, like, is this viable? Is this prop firm offering me something better than another prop firm? Essentially saying, how much drawdown do you possibly have in regards to the profit that you have to make, right? Let's put that into numbers. If my target on an account is 8%, right, and my drawdown that I'm allowed is 8%, then what's the ratio there? 1 to 1, right? 8% target, 8% drawdown. That's not bad. If you have an account which is 8% target, right, profit target, but you offer 10% drawdown, is that better? Yes, it is, because you've got more drawdown to maneuver, right? Makes your life a little easier now. Look, I can afford to lose 10%, I only need to make 8%. But of course, you see with these things, right, it's all good and well to say them, but you got to remember there's a lot of different factors, including price. Certain firms may have better conditions than others, and etc. So when we look at prop firms, we need to take everything as a whole rather than, oh, this is good, right? Of course, every firm can have one good thing but have other horrible things, right? Another big difference is a one-time fee versus subscription cost, which I already mentioned. Now, some of the futures firms offer a lifetime fee. I'm not sure if all of them do, right? Most of them probably will be just monthly based, and you're going to have to pay that monthly fee. Now, the good thing is that the monthly fee typically is not a lot versus the account size. So if you're, making regular payouts, if you're a profitable trader, if you're doing well with futures, it shouldn't really be a problem to cover that, that fee. Another thing is that this fee, right, that counts with the futures firms are typically a lot cheaper than the normal prop firms, right? So it kind of waves it off, kind of cancels out in a sense, right? Another thing we've spoken about is the centralized price feed versus the off exchange feed and what that means for us as traders, right? The idea of no spreads and slippages and everything is much easier. Now, one thing, right? The second last point, futures are less crosses, right? Now, in terms of centralized price feed, because we have this, they're trading, right? They have some of the most liquid assets on there. What does that mean? Some of the biggest traded assets, Euro USD, GBP USD, the indexes, gold, oil. But what it means is it doesn't have some of the other ones, right? If you trade some fancy currencies such as the Mexican pesos against the dollar, or, exotic pairs essentially in Forex, then you're better off sticking to the futures prop firms because you're not going to, the Forex prop firms, but that's not going to be offered to you with the futures prop firms. Right, with futures, you're going to get the most liquid assets and you're going to get great conditions. So if you trade some of the ones that I've been mentioning, for example, if you trade S&P, Nasdaq, US 30, right, you trade gold, oil, EUG, then futures could be a very good idea for you. Right, coming back to the list, contracts versus lot sizes, right? So the sort of technical aspect of how we're trading. Now, I'm sure most of you guys, when you begun as traders, right, probably had to faff about with the lot sizes. How does this work? What lot size do I need to use? Lot size calculators, etc. It is not the exact same for futures. We don't have lot sizes. We have something called contracts. You have micros, minis, and actual contracts, right? And the contracts are worth slightly different for each asset class. So depending on what you trade, that's actually something you're going to have to do a bit of research on. I may make a video for this separately, just giving quite a short video, just giving a few examples and showing how you can go about it. But it's important to understand that if you do transition into futures, it's not just a visual change of how you're trading. There's quite a few moving parts that are going to change. And, even though it might sound great, the way I'm talking about certain things, you've got to remember that these things, where you're not used to them, where you're not used to using contracts, you might not be used to using trading as a trading platform, they could also hinder with your performance, right? A big one, right? Futures is not for the swing traders, right? You have to close your positions before the end of the day, right? The CME, the Chicago Mercantile Exchange, closes, I believe, for an hour every day. Before that hour, your positions need to be closed, right? And then after the hour, if you want, you can reopen, you can go back to trading, wherever it is, right? But before that, they need to be closed. Now, some firms, what they will offer you is that they will just close your positions for you, right? But as a trader, it's important to be aware, right? Knowing the time of day, knowing, oh, my position needs to be closed by now, etc. You can plan accordingly, depending on what pair you're trading, what position you're in. And then, of course, at the end, the last point the withdrawal restrictions. The Forex prop firms are a lot more straightforward. If you pass your account, you make a payout, very simple. If the payout is, sort of accepted, green light by the prop firm, you get your split, might be 80-20, 75-25, whatever it is, right? Simple as. With futures, like I said, they have a few more parts to it. Right? It's a bit different because, like I said, with MyFun Futures, what happens is in your first payouts on a 50k, you can only withdraw 2k. Right, that applies for X period of time, and then eventually you can withdraw how much ever. Right, with the futures firms, what I believe it is, they're much more oriented towards traders that are very consistent. They want to see you build that consistency. They want to see you, pull these numbers all the time. Another big thing with withdrawal restrictions on futures firms that's very important to know, right? Because they have a trailing drawdown, you can only withdraw so much, right? Let's just say, right, you've managed to get to the stage where, for example, on your account, you've made the payouts, you don't have any withdrawal restrictions on amount. So let's say, you had a 50k, you made a 2k payout, you've done another 2k payout, and now the firms come and said, like, you know what, on your next payout, you can withdraw how much ever. If you only have 6% trailing drawdown, you need to be very careful, because what that means is, right, if, for example, you were 6% up, and now your drawdown has also followed you, and you withdraw the whole 6%, what's going to happen? You're basically going to blow your account, right? Because your balance has now gone 6% down. It sounds so annoying. I think it is very annoying. I don't know why they do it like that, but it basically means even if you are in profit, you have to be very smart about withdrawing. For example, if you had 6% worth of profit, it's not worth withdrawing the whole 6%. Maybe you take 2% out, you build it up again, take another 2% out, and however you want to do it, you would have to sort of figure that out. But that's something very important to recognize and plan ahead for. Cool. Let's do a quick comparison, right? So on the left, I have MyFun FX. This is their 2-step challenge, and on the right, I have MyFun Futures, so the same company, but their future side. Now, what we have here, right, the 2-step challenge, I'm assuming a lot of you guys already know this. There's no minimum trading days. You have an 8% target for the step 1, right? 5% target for the step 2. Very easy. Unlimited time to trade it, right? When we come over to the MyFun Futures, they offer 2 accounts. So this first one is called a starter account, and this one is called an expert account. Now, they're very slightly different. You guys can already compare between them, right? The profit targets are different, right? The max position, right? You can only have a max sort of risk you can have on the table at any time is different. You don't have a daily loss limit, but you have a trailing drawdown, right? Very important to know. The drawdown mode, end of day, right? So essentially that hour that it closes, that's when it resets, and then you go back into a new day. Over here, you guys can see on the starter account, you have what we call an activation fee, right? That's the fee I spoke about. So once you pass, you're going to have to pay this activation fee, right? Whereas here, no activation fee, but we have a reset fee on both, which basically means, right? So let's say, for example, you bought an account with MyFun Future. Let's say we bought this account, the starter account, right? So let me give you guys an actual scenario so it's easier to understand. Let's say we buy this account, right? It cost me $50. Fine, that's a 50k, cost me $50, done. I trade this account and I fail. I don't have to pay this activation fee until I pass. So I only spent $50 and I failed, that's fine. If you want to reactivate the account, basically saying let's reset it, let's go again, it's just $50 again, right? This one has a scaling rule, a macro scaling rule, and a consistency rule, whereas these don't exist on the expert. So the expert is much more expensive, right? But it gives you a lot more freedom in the way that you want to trade, right? Whereas with the starter account, it's a lot more restricted, but the price difference is quite crazy. It's essentially a 5x here, at least, with the current discount, it's a 5x. But you see, guys, with futures firms, one thing I want to say is that they always have crazy discounts. They always do this thing like, $300, cross it out and put like $20 or something. You got to remember, right? They're happy to take that $20, $30 because if somebody is consistent, they pass, then they're able to get that activation fee from that trader, right? So don't get sucked into some firms doing crazy offers, because what you might get is some firms saying, you know what, here, look, our account is $30 today. And you're like, wow, $30, this is crazy. You go ahead and buy the account, and then in the end they tell you, okay, cool, you pass now, your activation fee is $200. And you see now, what you need to see it as, not that my account was $30, it's $230, right? Ideally, when you're trading an account, you're planning to pass, right? So you need to take the whole cost and take that into account. So this is just a side-by-side comparison. You guys can see, over here, we don't have that trading drawdown. We don't have these other rules. With the Forex prop firms, they're a lot more relaxed and straightforward. But with the futures prop firms, although overall they are much cheaper, there's a lot more going on. And in itself, it's sort of like a whole new branch of the industry that you have to venture into. So it's very important you understand all of these things and a few more things that are on their website before you actually go into it. Now, the last thing I want to leave you guys with is MyFun Futures are currently actually doing a very good discount. You guys can see it, right? All of their accounts are $50, right? As I showed on the previous screen. They're 50k, 100k, and 150k. If you pass the account, then you have to pay the activation fee, right? If you don't pass the account, then it's fine. That's it, right? The reset fee is the same amount, and this is available toward the 30th of April. Essentially, if you buy this, right, it's only available on the start plan. If you buy this and you lose, right, if you lose the account, the reset fee will always stay at $50, right? So, if you wanted to experiment with futures or try to get into it, I would say this is a great offer and a great opportunity. It's a good time to try, I would argue $50 is not a lot for most people. Hopefully that's usually the size of a 5k account on Forex prop firms, and over here you can get 150k capital potentially. Of course it comes with strings attached, but I would say that is a pretty good trade-off. On top of that, if you guys use my code DOTS10p, it applies the best coupon that you can apply. Essentially the best coupon that's available for MyFun Futures will automatically applied to the account you're trying to buy, right? But that is it for this video. I will try to cover some of the topics in, smaller videos, go into them a bit more depth, the sort of stuff that, people struggle with the day-to-day, the contracts, the lot sizes, that sort of stuff. But any questions at all, guys, just leave them below and I'll make sure to get back to everyone.